This is an impromptu members e-learning on Friday the 21st of December. What I was asked to do is cover some stuff on what we do here in the room. I'm going to take some charts. I'm going to make this really fast because we're only going to spend about 20 to 30 minutes here total. But we already had an intro to day trading videos. I have videos on my stuff, but I want to give you a kind of an overview of what you're going to see here. In this briefing, I had the items that are already talked about: trading rules, favorite patterns, how I evaluate candidates, how I do trade entries, targets, and stops, how I calculate them, trade management, and why trade journaling is so important and what you should track. Now, there are a number of trading rules that you should use. You gotta have your own objectives in the long and the short term, and include daily, weekly, monthly goals. And those are important to keep you on track, so you measure how you're doing. If you don't measure at all, then you can always tell yourself and fool yourself into thinking you're doing all right. And you need to establish what your procedures are before a trade. Do you look at the daily time frame? Do you look at weeklies? Do you only look at 60 minutes? Do you look only at the time frame you're at? It'll depend on your trade strategy and how you do things. What type of trades you specialize? Is it day or swing or scalping? What strategies we use? You use breakouts, breakdowns, pullbacks, moving averages, crossings. I would strongly suggest you choose one, but no more than two to begin with. Become very proficient at those before you add anything else. And one possibly in an uptrending market, and one for downtrending markets. What entry criteria are you going to use for each of the strategies, and how will you determine your targets and your stops? You need to come up with a set of rules that help you manage money so you don't blow your account out. How many shares or dollar cost average trade, is that what you're going to use? Are you going to use a maximum risk? And if so, what amount is that you could live with? Do you have any average daily volume requirements? Ravi was showing us today a number of stocks that were under 500,000, and we said, we're probably not going to trade those. Day trading should be probably kept closer to 1 million, but definitely over 500,000 shares. Will you allow yourself to do counter trend trades because they don't have the wind at your back? Or will you restrict yourself to only trading in the direction of the trend? And do you determine the trend by the overall market or a spider or by the stock? All right. They must be written, measurable, and realistic. And the one that's most violated most is realistic. They're unreasonable. Like, I got $5,000 and I want to make $65,000 a year. Probably not going to happen. Set goals, do's, and don'ts. Have a goal for the day, for the week, the month. If, for say, you start with $100 a day goal and then increase over time, that could work. Set a maximum number of losers or a max dollar amount per day. Say something like 3 losses or $200 maximum, and so that you don't blow your account out. Because if you're getting a number of losers and a number of consecutive losers and or a massive amount, a significant amount of money, let's say with $100 risk on each trade, and you have $300 loss. We've had at least 3 losses, if not more. You're probably out of sync with the markets. Stop before you blow out your account. Okay, will you trade only in the morning, or will you be only during regular hours and no after hours? For me, I only do the regular open. I don't do after hours. I may do pre-market to sell if I've got something, but I don't necessarily initiate new trades in after hours or pre-market. Don't trade within 5 minutes of the major news event like the FOMC. Do you do all in, all out, or do you trade in lots? Do you buy all and then scale out, or do you scale in and scale out? My suggestion is a single entry with scaling out. My favorite patterns is basically the same as they work on swing trades, and they work on, way to go, Stalker, daily 60, 30, 15, and 5 minutes. And 3 and 2s as well, but not as well necessarily. I like to trade in the direction of the trend. I will take counter trend trades on an exception basis. And I think I did one earlier today. The J hook, it's a pullback using a Morningstar pattern. Hammer shooting star, Doji gap up, or down, reversal of the trend basically. Bullish or bearish engulfing, and the continuation pattern, 1, 2, 3 pattern. Now what I'm going to do right now is I'm going to step over to the patterns. And there's where they are. Here's my J hook. It's a move up, followed by a pullback, followed by a reversal back up. What I like to do is to go long over a bullish signal and set my stop pretty tight. My first target is going to be this level here, a retest of this last swing level. And then once I get that much profit in my pocket, I would have to let the thing come all the way down to my entry plus go on the opposite side to turn it into a loser. So it's hard to have a loser if you take partial profits on the way up. Buying on a sign of strength. All right, like here. This is a daily, but it works, the J hook. Here's the warrior. There's J hook on a 15-minute chart. And I like to use my stochastics RSI. 77% K3, percent D3. 7733. Some places, charting programs like Thinkorswim only allow 3. It is 773. And it helps me confirm what I'm seeing in the candles. I do not use it as a primary indicator. The candles and price are primary. You can do an inverted J hook. This was a 5-minute chart on the Qs. I want to say it was August or September. We gapped up and kind of flailed away in 169 level or whatever. And as we got lower, we did a gap fill, we did a little bit of a bounce, and then we rolled over. So we did this reversion to the mean. You'll hear me talking about it at times. And down she goes. Where did it go to? It went to the prior swing level. Hammer, hanging man. They're basically the same, but one is after a pullback, is an up reversal, and one is after an uptrend that's reversing back down. You need a confirmation, as in all candlestick signals, you need at least one confirmation candle, if not 3 total. Where 1 before or more, like this is the trend beforehand, that's 1. The actual candle pattern, candle itself, and then the reversal. This is the candle pattern. The hammer pattern is the down, hammer, and up. Hanging man is the up, hammer, and down. It's not just the candle. If you use just the candle, you're gonna get whipped around and fooled quite a few times. And I got some examples in here. Inverted hammer shooting star, similar to the one we just talked about. Here's the inverted hammer. A lot of people see this as a sign of weakness. In fact, it's a sign of strength. The shooting star is most definitely a weak signal, especially when it's combined with the uptrend before. Pause, could not hold the highs, and then starts to go lower. The reason this one's positive is Over here, the inverted hammer is you're going down and you had buyers go all the way up to here and it went back down to here. And with the follow up, your first target is the prior swing. And those are some examples. Here's the morning star, and the evening star, the opposites of one another, mirror image. Basically V reversals. Buy on a sign of weakness, strength, sell on a sign of weakness, and your stop is really tight, either at the upside or the downside. And look where they are in swings. The Doji reversal, I'm going to spend a little bit of time here because the Doji reversal pattern is pretty important. Is we get a wide range bar here and a move sideways. Wide range bar, move sideways. There are two of these that are very similar to one another. This one has a Doji cross, and I use the stop under the low of bar 3 because it's the highest of the two, because it's the highest close of, lowest close of the two. And on this other pattern, I will use the stop under the low of whichever bar, because there are no wicks, whichever is lowest. I tend to disregard wicks because closing and the body of the candle is more important. I will consider them, but I tend to ignore them mostly. What you like to do is see a doji at the bottom of a bearish downtrend and a doji at the top of a uptrend. Okay. Consolidation or pop out of the box. This usually happens on the way up, where you get sellers beating down the price and won't let it get out. There's usually a big seller at that level, and it's usually a round number, either 00, 0.25, 0.50, or 0.70. And this is a rising wedge, and a rising wedge to me is bullish. We're looking for a breakout because each time the bears beat the stock down, it tends to not go as low, and you know that the bulls are winning, and at some point you're probably going to get a breakout. Do you get any follow through, or does it come right back? We don't know. Bullish continuation is a 3-candle pattern that we talked about here. It's basically a variation of the 1, 2, 3 pattern. A lot of times the run up or run down, but the preceding trend after you break out, it will be in the same order of magnitude. It will be what they call a measured move. Okay, and bearish and bullish engulfing, I bet you know all about that. But basically, you have to have it in a trend beforehand, and it needs to reverse. And if it doesn't, then this is basically 4 candles or 4 parts to make up the pattern. Part 1 is the entry, part 2 is the exit, and the 2-candle pattern for the engulfing. All right, get away from that. I will tell you that my chart setup, I use candlesticks. I use a 3, 8, and 17 exponential. I used to do a 9, and that's kind of an industry standard. Rick Sadler, when I got in the room, I was using a 9. People kept asking me, why are you using the 9? So I changed the 8 so people wouldn't ask. It's basically the same. I use them to visualize a trend. I don't necessarily use them as triggers. The 17 EMA, little more responsive than the 20 simple, but very similar. SMA 50 and 200, I use them on daily, but I also use them on some of the longer intraday charts, primarily because the 50 and 200 some people use. I don't necessarily give them a whole lot of credence, but some people do. I talked about the stochastics RSI. It is not stochastics, and it's not RSI. It's the stochastics RSI. It's different. It's an oscillator of an oscillator. Balance of power is TC2000 proprietary. I use it as kind of an indicator of momentum. All right. And I went over the moves. I'll let you go over the video for post-trade analysis. Don't need to go over that again. Finding candidates. You know, I use TC2000, I use TOS, I use whatever broker I've got. And the big one I use for day trading is earnings list. It has the biggest impact on price, in my opinion. I look for earnings surprises and a positive surprise on high short interest to be found. You can't find it in TC2000 anymore. You can find it on FinViz or shortsqueeze.com. News. Any news announcement that would float directly to the bottom line, i.e. FDA drug approval or disapproval. And hey, the people in chat rooms, stock twits, you know, you name it, you can find them. People put out candidates. You need to evaluate them yourself and come up with your own ideas of whether you believe it. And a lot of stuff I see on stock twits is absolute garbage because people are not technical. They're doing it on gut feel. I like to know whether we're approaching support and resistance. You've seen Stalker, and I mentioned that repeatedly today. We talk about what the markets are doing, your sector, what time of day is it? You know, do you want to be trading the first 5 minutes of the day? Probably not. Do you want to be trading at lunchtime where there's low volume and it can be manipulated? Probably not. What's the short interest? You need a daily setup that's decent. If I don't have a daily setup that's decent, I won't trade a stock. Just plain and simple. You need extra volume, primarily to keep so you can get in and out, and it keeps the spreads from getting too wide, and tends to prevent whippy action. Now you're going to get some spreadiness and whippiness with earnings stocks, but we're not talking 40, 50, and 60 cent spreads that stay there all day. You want to know if we are approaching or near a support or resistance level. You can judge how it's doing when they get there. How's the market doing? How's the sector doing? How's your industry? Okay, did we already cover that? Yeah. There are some major reversal times that I have borrowed from someone and modified a little bit. 935, minor reversal. Why? Primarily because people who get calls from their broker the night before or during the morning of, they get sold into stocks and they just buy. And a lot of times they use market orders. Thanks. Feed the ducks. 10 a.m. Hey, we have a lot of announcements at 10:30 and 10. 11:30, people are going to lunch. Not necessarily as much anymore. You got the program trading and stuff, but 12 and 1:30 are minor reversal periods. Why do you think 2 o'clock or 2:15 or 2:30 now would be a major reversal? Things like FOMC come out. We have other things that economic reports that might come out at 2 p.m. People coming back from lunch. People trying to do an afternoon run at a stock, either sell it off or buy it. 3 o'clock of minor reversal at 3:30. People who have been long or short all day are starting to exit their positions. If they're short, they're going to cover. If they're long, they may start to lighten up a little bit. I use swing levels quite a bit. Let me bring up the chart here. Basically, the grayed area here with the light blue line over here with a little dashed line in the middle, that's a 5-minute opening range of the spiders. And notice how we stayed around there until we got our 10 o'clock news announcement about the consumer confidence, and we had a big spurt. But before that, we were in a trading range. And what's happened since then? We basically have busted down through the trading range, but we're coming back towards it. Well, this will help me get an idea of where I might run into resistance on the way up or support on the way down. Where did we have some support early in the morning today? Right around 247.50. On the pullback, where did we kind of stop and try to rebound a little bit? 247.5. Again, where did we kind of see a little bit of support? Right above the 5-minute opening range. Yeah, 2 to 4 institutions. Right, and then we got what could have been a bear flag here, maybe a reversal. All right, but that's how I try to use the swing levels as entries, targets, and stops. My trades have to have the potential for a 2 to 1 profit target. The reason is, if I can get 2 to 1 on the trade, I only have to be right 1 out of every 3 tries to break even. I only need a 50-50 chance to actually make money. All right, we're going to do some share sizing here. This is how I figure out how many shares to purchase. I don't use the same dollar amount. I base it upon the amount of money I'm willing to risk, and it's based upon the entry and the stop. Let's go, and there's several methods, but this is the one that I recommend. If I were looking to risk no more than $200 on a trade, and I had a stock that I have an entry at 13.5 and a stop of 25 cents lower at 13.25, I calculate the difference is 25 cents, and I divide that into 200 and come up with a maximum number of shares of 800 that I can buy. Does that tell me I have to buy 800? No. It just says you cannot buy more than 800. Well, I have a share sizing lookup table. I've got it pinned to the wall just above my monitor. And the risk amount, I look down the vertical column to 25 cents, and then I look over to where I've highlighted 200 and look up, and it tells me the maximum I can buy. Now, I could do the calculations every time, but why? And I've done them every nickel, and it's basically a nickel. Okay. Big thing is plan the trade and now trade the plan. And always honor your stop and never, quote, adjust it, unquote. Don't talk yourself into it, because that's going where you go down this slippery slope. That's when a day trade becomes an investment. When to take profits? How much is enough? Sell when the stock hits target 1 and trail the rest? Maybe, if that's part of your plan. Monitor the markets. A rising tide floats all boats. But a tsunami is going to sink them. So watch out. We've had some tsunamis lately. I won't go over the example charts. You can look at them. And trade journaling. Once they're written, it's hard to deny the facts. I've written once, twice. What to record? You know, the performance related stuff. What was your entry, stop, exit, P&L, and what the heck were you thinking? What were your expectations? Put it in the comments section. What's the market doing? What did you do right or correct? Or what could you do better? Or sometimes said wrong. And when should you do it? As soon as possible. Because you'll start to forget stuff. I don't care how young you are. How do you do it? Spreadsheet, Trader Vision, any kind of journaling program that you purchase out there or create your own. But the bottom line is you got to do it. All right. We're pretty much done with the overview of trading and day trading in this room. The way I like to do it and the way I like to run it. It's your room. I do this for you. I am trading my own strategy and methodologies and letting you look over my shoulder